actually start this main review by looking at the couple of bellwether stocks. This is Citigroup in the US. So a very limp chart on the daily. It is a buy signal, so a new low, close above next day. I mean, that suggests that the selling could be over. But if you look at what's happened on Citigroup, it's had a very steep decline. And when we've had little pushes to the upside here, they've just been sold into. This is why I'm just very cautious on these markets, and I am going to be looking for some short entries. We'll talk about that in a minute. Let's just look at a couple of other US bellwethers. This is let's have a look at Bank of America. And again, we're not even closed above the 127 extension on this one. So I think this is why I'm still very bearish on this market. I think that's a pretty pathetic attempt to push this market higher. Goldman Sachs, however, has come off the 127 extension. So I'm seeing this market at the moment, I'm just seeing it as a bounce and not as a reversal. I would, on something like this, I would dip my toe in the market here. For example, where you get a buyer's bar here, it does not close above this bar here. This bar has closed above the previous day's bar, so that is much more convincing. Well, it is convincing, as opposed to this one that is not convincing, from the point of view that it's an engulfing price action in the candles, not just a blue bar. If you look at previous examples of this one, where let's see, another situation here where we had a new low close above that only generated 2 days of buying in December, and then we had 2 days of selling right back to the support level. So you can see my caution. The only thing I would say is the fact you're coming off a fib level here, I think that is a greater probability that will push higher. Let's see what the weekly chart's left us. It's left us with a higher close in the weekly, hammer-like bar. If I strip this one back and then fib it, basically US stocks just got very expensive. So we're right on the 50%. So there's a hammer on the 50%, 127 on the daily and 50% on the weekly. So if you're interested in this one, and I will take a small position on this, I would nibble at a nice big number like 152.50. So I'm going to wait until that drops back into that bar and then see if I can get a decent pullback. Alright, in the meantime, let's just go to the indices now. You can see let's look at the FTSE, because the FTSE was probably one of the most impressive of all indices, the best close. So we've come off this lower fib level on the daily chart and we have pushed right in the 50%. So that's a huge amount of resistance, hence my concerns. But if we drift in the early part of the week and hold 5800, then I think we could start to wind our way back up to this support. As for a chart pattern, I'm not even going to attempt to draw a chart pattern there because there isn't one. At least I can't see one quickly. I hadn't actually asked myself the question if is there a chart pattern. Right, I'm going to leave that alone. It's not a chart. Let's just say that any pullback into 5800, if that holds, then I would suggest you might want to look at that, but be very careful. See, this Dow I think is just not convincing. We have closed above this fib level here on the daily chart, and we have a hammer on the weekly. But you're talking about, in terms of the weekly chart, the close is only something like 100 pips higher. So if you are going to buy and hold this, I would wait for a pullback to something like 159 at least. But for me, I'm going to be looking to see if we can climb up to something like 164. Let me mark 164 properly. And 164 is very, very close to that fib level. I think we've got the potential to climb back to 164, at which point I think we'll see the sellers come in. So I'm going to leave that marked. Okay, now as for let's start with the euro. We have long last. Well, I say at long last, we're still range bound. All the time we're holding that level there, 108. We only close fractionally below 108. I think we could stay horizontal. That is the daily is much more convincing. So 109.75 area has been sold, and we are beginning to get this decline. So if this continues, then that's good news for the markets. It suggests that the appetite for risk is improving. We're just narrowly below that trend line. And of course, we've got US rates on Wednesday. So this is going to be the future of the euro is going to be determined potentially by that announcement on Wednesday. The pound US threw ourselves up into that resistance area that I had marked last week. So we are very flat on the week, very flat on the week. The pound yen, however, is much more convincing on the weekly chart. As you see, we did not close above the previous week, so we are only sitting inside the previous week's range. Yet another example of how these markets are not spinning a convincing story. The indicators are coming off the floor and beginning to turn up. So yeah, if I see 168, let me mark that one. If I see 168 holding next week, then I will be inclined to buy into that and see if we can come and test 1750. So what we've effectively got is, in terms of Elliott wave, we've got 1, 2, 3, 4, 5, with hardly any pullbacks, just consolidations and selling. Consolidate, sell, consolidate, and eventually capitulate. So all we're getting here is, but we could potentially all just be getting a bounce. Now the fact we've closed above this one here, this level here, is significant. Now look at that, that matches the level I've just indicated. So that's confirmation of the low in October 14 is potentially the pivot point for the coming week. And that's literally all I got for you. Let's just look at oil. This is positive for the market, with oil stocks suffering, and there's so many jobs on the line in this industry. This is a very important industry for the US and even parts of the UK, i.e. Aberdeen, Scotland, and of course European partners. The Saudis have been really suffering under putting on a lot of pressure on this weak oil. So the bright signs in the market are oil, and the weak spots in the market are those US banks I pointed out. And that's gold. So the gold you can see is potentially getting ready to fall off of here. So we had a new little close in this range and then close below. So this looks as if this little trip to the upside could be over and we can resume the downtrend. If you look at it in Elliott wave terms, we have had 1, 2, 3, 4, 5. So we're getting a 1, 2, 3. This could be the end of wave 3. If you just put basic support and resistance on this, yeah, we are. To me, this is a bearish consolidation. Yeah, there's the big sell-off. We've been pulling up, getting close to this 200 EMA, and now we're just struggling under here. So close above 1100, and this could come and test 1120. To me, we look as if we are getting another leg down here. Alright, so that's all I've got for you. I will, like I said, I will be in the room tomorrow, and Traders Roundtable on Monday. Alright, see you then. Bye.